Assalamualaikum and hi everyone. Today our group will be present about issue to fintech industry and issue technology disrupt in financial services. Our group consists of 3 members, which is myself, Sharifah Najah binti Said Muhammad Fakhruddin. Next is Siti Nur Amira binti Shafri and lastly Nur Wajihah binti Azlan.
So now let's start it with topic 1, which is issues to fintech industry. And for the first issue, which is risk to consumers, consumers may benefit from fintech, but it also carries issues. First, customers lack knowledge of fintech's design and function. According to KPMG International 2019, study shows that Malaysians of all ages and backgrounds lack of financial awareness. Most Malaysians knows that one income must always cover expenses, but they were unaware that insurance was needed for unexpected events. The paper then quoted a credit counseling and debt management agency, AKPK survey that found 1 in 3 Malaysians have low financial management confidence. Hence, extensive exposure must be undertaken to educate the public on the importance of financial stability to ensure they can manage wisely. For example, the existence of buy now pay later BNPL services in fintech like SPayLater, Atomy, Hula and other may attract them to get financial solution for their desired things that more likely will threaten them to financial loss if they are not be able to pay the installment back. So, new legislation will be enacted to regulate and oversee BNPL schemes. Bank Negara Malaysia (BNM) is collaborating with the Ministry of Finance, MOF and Securities Commission Malaysia (SC) to enact the Consumer Credit Act in 2022 in order to strengthen the regulatory arrangement for all consumer credit activities such as BNPL schemes offered by non-bank operators, and this regulation will clarify the regulatory treatment of BNPL program, which some have viewed as operating in a regulatory grey area.
So next issue of fintech industry is security. The fintech sector biggest security issue is identity theft and data breaches. One-time password and other form of authentication are used by fintech company to protect the payment system. However, hackers still succeed in breaching this system to take over all the financial and personal data of the customer. As in my research about this, in August 2021, PineLab, which is a B2B financial institution, was reported to have been under cyber attack. The names and email address of the firm employees as well as confidential documents of the firm were allegedly exposed by a hacker group named Black Ransomware. Before this, data was stored in local data center or personal computers. Now, cloud has been used as a backbone for online delivery of financial service. And because of that, there are a few security risks lurking around. With a lot amount of data flowing through cloud, it's easier for hackers to launch attack. So the solution of this security issue is personal user data must be protected. This information should only be accessible to authorities person. Fintech businesses must regularly upgrade their security procedure to address emerging risks and guarantee that consumer data is always secure.
Alright, so now I will continue the presentation with the next issue, which is blockchain integration. For your information, blockchain technology has become increasingly popular in the field of financial technology, which is fintech. It is considered a promising solution to enable greater data sharing in businesses, while also increasing the dependability of fintech companies. Blockchain implementation can enhance the reliability of fintech businesses by providing a secure, tamper-proof record of all transactions that allow for review and monitoring. However, the process of block merging presents a significant challenge to financial institutions due to its complexity. As a result, traditional banks and other financial organizations are only starting to adopt blockchain technology, while fintech startups are attempting to revolutionize the industry by pioneering new cases. Nevertheless, these companies still need to closely examine the position of traditional banks and the government, which remains skeptical of blockchain technology despite its potential benefit. So overall, blockchain technology has the potential to significantly impact the fintech industry by ensuring trustworthy and transparent transaction. For the solution, when using blockchain technology, so we need to make sure to follow all applicable government rules and regulation.
Now let's move forward to topic 2, which is issue technology disrupt in financial services. And for the first issue is cyber securities. Fintech may face cyber attacking in a sector where scammers target sensitive personal and financial data. Risk identification and evaluation should assume a security breach and plan to minimize the damage because preventing all cyber attacks is nearly impossible due to diverse way consumers interact with their money and the many existing vulnerabilities. Even if you prevent attacks, mobile app, web portal, third-party networks, and staff and consumer flaws may breach security. They must share knowledge and best practices, work with government to prioritize cybersecurity, educate employees about their cybersecurity responsibilities and the importance of following protocols, and educate the public about the situation and their role in protecting their data. For example, BNM's 5-year plan is to strengthen system-wide cybersecurity oversight and capabilities, including strong cyber risk governance and management and sharing of actionable cybersecurity intelligence. And next is to strengthen domestic and global collaborative effort on cybersecurity, such as advocating for greater standardization in cybersecurity and cyber resilience terminology and delivering specialized cybersecurity training and certifications.
Next, the biggest change that bring by fintech into the financial service is a business lending, which is peer-to-peer or P2P lending. P2P lending is a form of financial technology that allow people to lend or borrow money from one another without going to the bank as a middleman. The problem is, does P2P lending safe? P2P lending is riskier than saving account or certificate of deposit, and the interest rate of it is also much higher. There is a more hazard that makes this business lending need to be monitored. Those tricks begin with the verification of the borrower's data that is not appropriate. As example, in Indonesia, fintech P2P lending has received special attention because its regulation and policy have not matured yet.
The next issue is many industries threatened by technology disruption. So nowadays, digital technology is very advanced all over the world. The problem today is that many jobs are being replaced by technology and many people lack the necessary of technical skills. It's an advantage for individuals who can interact with the technology. For you guys' information, more than 20 industries are threatened by this technological disruption. For example, in the travel world, by creating travel website, Expedia, Kaya, and Travelocity have eliminated the need for human travel agent. Even in the banking world, many banks give the customer the ability to deposit checks through mobile apps or ATM to reducing the needs for human bank tellers. Payment systems such as Apple Pay and PayPal make the acquisition of physical cash unnecessary. For the solution, in my view, we need to balance both parts of the service. In other words, online applications are really easy for young people who are smart in digital technology, but traditional services are still needed for parents and seniors who don't know much about IT.
That's all from us, and thank you for your attention.